If your spouse passes away, your joint bank account does not work the way you think.
You've had a joint bank account with your spouse for decades. Both your names are on it. You've always assumed that if one of you passed away, the other would simply keep using it. No paperwork, no drama, no waiting. And for the most part, that's true. But here's what almost nobody tells you. Even a joint account with your spouse's name on it comes with 5 things that happen the moment the bank finds out your spouse has died, and at least 2 of them can catch a grieving widow or widower completely off guard, sometimes at the worst possible time. Today, we're walking through exactly what happens to a joint bank account when a spouse dies, the automatic parts, the parts that surprise people, and the parts you can prepare for right now before you ever need to. Let's get into it. Point 1. Ownership usually transfers to you automatically. Let's start with the good news, because there is good news. Most joint bank accounts, checking, savings, the accounts you and your spouse have used for years, are set up with something called rights of survivorship. That's a mouthful, but the idea is simple. When one owner dies, the surviving owner automatically becomes the sole owner of everything in that account. Not half, not your share, all of it. This happens by what's called operation of law. That means it doesn't go through probate court, and, this is important, it doesn't matter what your spouse's will says. Even if your spouse's will names someone else to inherit their money, the survivorship designation on the account overrides the will. The account simply becomes yours. To actually access the funds, the bank will typically ask you to bring in a certified copy of the death certificate. Once they have that on file, you should be able to continue using the account. That's the simple version. Now let's talk about where it gets complicated. Point 2. The bank can still freeze the account. Here's the part that shocks people. Even though the money is legally yours the instant your spouse passes, some banks will temporarily freeze a joint account as soon as they're notified of the death. This can happen even on a completely standard joint account with rights of survivorship. Why would a bank do this? A few reasons. If there's any ambiguity about how the account was titled, if the paperwork on file is outdated, or if the bank simply wants to verify everything before releasing funds, they may put a hold on the account while they sort it out. For most people, this is a short-term inconvenience, but think about what that means in practice. This is often the exact account you rely on for groceries, the mortgage, utility bills, and it can become inaccessible for days or weeks right when you're also dealing with funeral costs and grief. The fix here isn't complicated, but it matters. Don't wait until something happens to figure out where your accounts stand. Know how each account is titled, keep death certificates easy to obtain quickly, and if you're the one managing the household finances, make sure your spouse knows exactly which accounts exist and how to access them. Point 4. Your taxes get more complicated than you'd expect. Nobody wants to think about taxes right after losing a spouse, but the IRS doesn't pause for grief, so let's cover this quickly and clearly. First, interest income. For the year your spouse passed, the bank may issue 2 separate 1099 INT forms, one covering interest earned under your spouse's Social Security number before the date of death, and one covering interest earned under your Social Security number after the date. Some banks combine this into a single form, in which case you'll need to divide the interest correctly yourself when you file. Second, and this surprises people, for federal estate tax purposes, the IRS generally assumes the entire balance of a joint account belonged to the person who died, unless the surviving owner can prove they contributed funds to the account themselves. Now, for most married couples, this sounds scarier than it actually is. There's something called the unlimited marital deduction, which generally means spouses can inherit from each other without owing federal estate tax. But this rule matters more if the joint account wasn't with a spouse, say a joint account with an adult child or another family member, because then that presumption can actually create a tax bill. The takeaway: Keep good records, and if the estate is large or the account wasn't strictly between spouses, this is worth 10 minutes with a tax professional rather than guessing. Point 5. If you live in a community property state, the rules can be different. This last one depends entirely on where you live, so pay attention if you're in a state like California, Texas, Arizona, Nevada, Washington, or one of the other community property states. In most states, a joint account between spouses automatically passes 100% to the survivor, no questions asked. But in community property states, spouses have the option to title a joint account as community property without rights of survivorship. If that's how the account is titled, only 50% of the account automatically belongs to the surviving spouse. The other 50% is treated as part of the deceased spouse's estate, which means it could be subject to probate and it could pass according to the will rather than automatically to the survivor. This is exactly why it matters to actually know how your specific accounts are titled, not just assume. A quick call to your bank or a look at your account paperwork can tell you whether your account has full rights of survivorship or is titled differently. If you're in a community property state and you're not sure, this is worth checking today, not after something happens. So, to recap, the 5 things that happen to a joint bank account when your spouse passes: ownership usually transfers to you automatically, but the bank can still freeze the account temporarily. Your FDIC coverage stays elevated for 6 months, then drops. Taxes get more complicated than most people expect, and if you're in a community property state, only half the accounts may transfer automatically. None of this is meant to scare you. It's meant to prepare you. The couples who handle this smoothly are almost always the ones who took 20 minutes, while things were calm, to actually check how their accounts are titled and talk to their bank. If this video helped clear things up, hit subscribe. We cover exactly this kind of practical, no-nonsense financial guidance every week, made specifically for people planning for retirement and protecting what they've built. Take care of yourselves, and I'll see you in the next one.